Oh gosh. What's going on, my friends? Guys caught me there drinking my morning tea before I was able to do my makeup. Or should I say take off my makeup? Of course, it is Halloween, so happy Halloween to all of my trick-or-treaters out there. It's Sunday, October 31st, 2021, and we are taking an updated look at our $25 a week dividend portfolio. Yes, we contribute $25 a week to our dividend portfolio. And looking at all time, you guys can see we are currently up to almost $1,700. We started this bad boy with $100 back on February 1st, 2021, contributing $25 every week. We did have one additional contribution that was larger than normal, which was $500 back on March 8th. Nope, excuse me, March 4th. March 4th, March 5th, March 4th, March 5th. And that was from our stimulus check. So we contributed $500 of our stimulus check. The other money we went towards bills. Maybe we treated ourselves to like a nice little dinner, spent $100 or something. But the goal is to get used to just setting your investment strategy on autopilot. So we don't worry about adding this money. This money is added automatically from our checking account. When you want to add something larger, maybe you happen to, you hit the lottery or something, you got a nice little extra couple $100, you got a couple $1,000. Maybe you stumbled across, you got a raise or something, whatever it might be, however you come across additional funds, it might be a really good move to just consider adding it to your dividend portfolio, because you can see this huge jump that we got there that helped to propel us forward much more quickly than what we would, where we would be had we not made that investment. And so really quickly, before we dive into the nitty gritty to see how each stock is doing, I do want to let you guys know I did just start a brand new growth portfolio. And, I took a slightly different approach with that, portfolio, but it is here inside of M1 Finance as well. So if you haven't started to invest with M1 Finance because of their ease to set up auto deposit and making your pies really easily, it's just, a very user-friendly investing broker and platform. Well, I definitely suggest using M1 Finance if you are just starting off, or if you want to, broaden your horizon. I have a link down below where if you use my link to sign up with M1 Finance, you can get, I think it's $30. It might be $50. They change it a bit, but you get free money when you start and fund your account. I think all you need to do is fund it with $100 and they'll give you some free money so you can start investing and growing your money like we're doing with our dividend portfolio and our new growth portfolio. And I think with our growth portfolio, I haven't decided on a day that I'm going to make a video. It might be similar to this where it's just going to be every weekend. Maybe not, we'll see. And I also have to finalize the decision as to how much money we want to contribute to that portfolio on a weekly or monthly basis. So if you guys want to be part of that journey as well, like I said, definitely subscribe to the channel and hit that notification bell so you can follow along on this journey. And of course, I do appreciate you guys watching. So, much appreciation for sticking around. And, if you guys appreciate and like the content, definitely give it a nice little thumbs up. Appreciate it, my friends. So we're going to dive in here, and you can just see, I want to show you guys, again, if you're new to investing, when you follow some of your stocks and portfolios on a daily basis, you might see things like this where you're down over the past day, negative 0.11%. When we jump out to the past week, though, you can see we're up 0.43%. And then the past month, we're up 3.43%. And then the past quarter, we're actually down 0.20%. Like I said, if you're following your stocks and portfolios on a daily basis, but it's a long-term investing, strategy or tool, you're probably not doing yourself any good service. You're probably freaking yourself out, getting worried, maybe even trading, which we don't want to do. We are not day trading. Swing trading. This is a long-term portfolio, so you don't want to be in here looking at it really on that level. Try to just focus on the long-term, 1 year, all time. And you can see, like I said, we're up 12.65% with a gain of $128.54. Not too bad, my friends. Not too bad. Now, when we jump in here, you can see our earned dividends are actually $35.50, and then our market gain is $93.04. So our market gain, meaning the price of the share price, the stock, is what's fluctuating in that changes drastically. But our earned dividends, this is what you're going to see just slowly start to get bigger and bigger and bigger. And this is what, this doesn't change. The market gain, this can go up, this can go down. But the earned dividends, we're only going to see that grow. So you don't have to worry if the companies that we have in our portfolio, if their market gain stayed stagnant, if they didn't go up at all over the span of this portfolio, the lifetime, that would technically be fine because we're always getting our earned dividends. That's the benefit of a dividend portfolio and why you don't really stress about what's going on a daily basis. And even if you have like a growth portfolio, you technically still shouldn't be stressing on a daily basis, because a growth portfolio means it's something that you're growing, and it's going to develop into a monster, hopefully a beast, a powerhouse in years to come. So again, you don't really want to follow it on the day-to-day basis, because it's only probably going to freak you out and have you stressing unnecessarily. So when we scroll down and we look at how everyone is doing, you guys can see we got our top dog, of course, as usual, Newt, killing it with a 43.69% return. Then we have PepsiCo at 26.12%. Then we have Realty Income at 23.16%. Then we have JP Morgan Chase at 20.16%. Then we have Coca-Cola at 15.28%. Then Procter & Gamble at 11.62%. Our newest company that we added to our portfolio, where we swapped out AT&T, which is Innovative Industrial Properties, IIPR, they are up 9.57%. Great start for them. Then we have Johnson & Johnson up 2.91%. And then Verizon Communications down 3.29%, and 3M down 4.79%. Now, the benefit, like I said, we're still, even if these stayed red all year, we would still be making money from them because we get dividends. Again, this is passive income. This is how you are generating another revenue stream. But it takes money to make money in this case. Sometimes there are other passive income streams that ways to make passive income, but it might be where you have to invest time and energy instead of money. So it all is the same difference, where you're going to have to invest something. The question is what? So when we dive into our earned dividends, you can see our top dog, Newtek, has paid us the most dividends. So they are showing us the best returns in terms of the stock price, but then also the best earned dividends, where it's $8.84, twice as much as the next top dog, which is Verizon Communications at $4.15, followed by Realty Income at $3. So this is not too shabby, my friends. Things are going pretty well, and we're just going to keep chugging along. This is how you grow your money. This is how you build your wealth. And the benefit, the beauty of using M1 Finance, as I've said before, and I'll say it again, is that you don't have to worry about anything. You just set it up auto deposit, right? Autopilot mode, baby. Let it just take care of itself. Set it on cruise control. And you just got to do what you're already doing. Go to work, generate your earned income, add that to your checking account, pay your other bills, and the M1 Finance will pull that $25, that $50, $100 every week, every month, whatever you decide on. They'll take care of the rest from there. And as you can see, the rest is history. So if you guys have any thoughts, any comments, if you have followed along with us from the beginning and your portfolio is looking remotely close, anything like this, feel free to leave a comment down below. Let us know how things are going for you and your portfolio. Maybe you have a few other companies you added. Maybe you swapped out a few companies. Maybe you're killing it much better than us. Let us know. Maybe we might want to consider adding in a new company, changing someone out over the next weeks. The end of the year should be exciting. I think the market should continue to go up. Of course, this isn't legal or financial advice, so who knows? But hey, I'm excited. I'm glad to see things are moving in the right direction, but I'm excited for what's to come with this portfolio and our new growth portfolio as well. So like I said, much appreciation for watching. Feel free to like this video, give it a good thumbs up, and subscribe to the channel. Hit that notification bell so then you can stay up to date on all of our latest videos. And on that note, you guys already know I got to keep it moving. It's Halloween, baby. Got to do my trick or treating. Yeah. But all right, my friends, I'll see you in the next video. Peace.